All right, folks. All right. About to get this show started really soon. Gotta get my mic right. All right. Something is going on. Oh boy. Yo. Can you hear me now? Can you hear me now? Yo. Can you hear me now? Okay. So, hopefully you ought to be able to hear me now. Let's wait one more second. Okay. So, yeah. Boom. What's up, guys? You know what? I'm doing some new things here, and this is something's going on. So you should not even really be able to hear my my mic at the present moment. So yeah, something's going on. But nevertheless, let's get right into it. I'm gonna just kind of look real quick at. Well, it would have been nice to have the audio up. Audio is coming from somewhere, and it's not supposed to. So that's the main thing. I'm not sure if it's that. Yeah, I gotta figure that out. All right. So anyway, spy on today. What did the spy do? The spy, yesterday we talked about how it kind of gapped up, and then after gapping up, now why do I have this? I must have two time frames on here. Yeah, I do. Why do I have two time frames at the same interval? That's 1 minute time frame. We're just going to take this one away, so we'll remove that. And again, if you visited with me at times before, you know that sometimes I have two time frames going, so that I have horizontal lines going on the current time frame, as well as horizontal lines going on the higher time frame, which gives me a better indication of where there may be more significant swing points at. But for right now, we're just looking at the current time frame, which is 1 minute, and right here. So at the end of yesterday, we gapped, we closed, very bullish, pulled back, moved bullish again, and then we moved up maybe as high as this high over the pre-market or something, and then we actually gapped up overnight. That's this box here, gapped up overnight. What are you doing? What are you doing? Okay. Well, that's new. My mouse is acting crazy. What is it doing? Oh, you know what? I feel like it's snapped to the. So if you over here on your drawing tools, if you have snap mode, then it will snap your drawing to the candle, or to whatever indicator. So we don't want to do that. We don't want it in snap mode. So we go here, and then so for the pre-market, it looks like this. Right, so that's just the gap, or you could look at the gap a little bit higher there as far as gapping up to that mark, and that's okay. Let's see, that's okay, but we had a lot of wicks down here. Of course, the stock moved up and then retraced back down into this area. So what I want to look at now is I want to see what happened in this area to help us identify that this was actually going to move up. So let's see, SPY. We'll open up another window. So SPY, and then I will take, I don't know what you call this on the, I think it's just called global positioning. So on my mouse, I'll just do a shortcut, and then it changes it to global positioning. And then so when I come over to my other window, it put it in the same spot, right? So this is what's happening on the 5-second time frame on the same chart. So this SPY, again, it kind of, I guess you can't see all the way back to 930, but it gapped up. We moved up, we retraced back down. This is the same box that we were identified on the other time frame. So we want to see what happens at these lows. And I moved to the 5-second time frame because I noticed on, it was SPY, Microsoft, it was a few charts that on the 5-second time frame, like this, right? So you can see, and I think I did a quick video on it earlier today, but on the 5-second time frame, you see these spikes here in the volume. These spikes, those spikes seem to be corresponding with terminal movements, right? So the bottom of a move, the top of a move, the bottom of a move, the top of a move, and that's one of the things I traded today. I think that's out of here. What I was. Okay, so here, so I don't think this references all of my trades for the day. I think I restarted it. But so this is how I perform. Yeah, I think I restarted. So I ended up, hang on. Sorry about that. Technical difficulties. Had to see the daughter off. You know, you know how it is. We family men around here. All right. So this is what I did. Nvidia. Yeah. So I took a few trades on Nvidia today as well. I think the last couple trades I took were on Nvidia. So you can see the P&L. If you look closely, about 3 bars from the bottom, you see closed P&L down $10.20, and then I was up $13.40. Then by that time, I closed out of several positions. I was up $90 on Nvidia. But overall, I did okay with trading today, and I've really had a transformation in how I trade. So I'll kind of talk about that a little bit here just now too. So this is what I did today, and of course, again, this is a simulation account, and I'm not a professional, and I do not purport to have professional advice. I'm not doing that. That's not what this is. This is for fun. This is for me to review this stuff, and the accountability of having this kind of setup. This is accountability for me. So maybe you get something out of it. But anyway, so on SPY I made about $61. On Nvidia I made $91. On this here on the call for $4.65 for options, I actually did well on that. I actually I think that was about $300. And again, TradeStation does not calculate these properly, which is why I stopped trading options, or at least doing simulation, for a trade station for options. You know, at the end of the day, if I can't use it as a tool to help me find out if I'm making progress, then it's not helping me. All right, so this is let's see, let's do the 1 minute time frame, and you can see where I got in and out for this call for 465. Well, can you? Okay. Oh yeah, it went up a lot at the end of the day, which is also weird. Okay, so I got in here and I got out here, right? So I got in here at 107 and I got out here. I don't know where it is. Oh yeah, it's, see, and this is what I'm saying. So I got in here. I don't think I got in here, but yeah, it's gonna be hard to tell because, like I said, TradeStation doesn't keep a good account of that kind of stuff. So you know, you just kind of really have to do your own journaling, your own chart and login to make sure that you are being profitable. So anyway, I got in on this bar and I got out on this bar. So if I got in somewhere in here, 106, 107, whatever, and I got out up here by 120, that's 13 cents. We'll call it 13 cents. And I got 100 shares. So 13 cents, that's 13 bucks. So maybe 130 instead of, where did I get 150 shares? 130, that'd be 130 if it was 100 shares. I got 100, I got 10 contracts. Yeah, 10 contracts, 13 bucks, 130. All right, so up 130 on that, and then I also did futures on, I did futures on Thinkorswim, and on Thinkorswim I was up about 300 bucks on those contracts, and it should have been a lot more according to that move. But you know, I like scalping. I do the scalping thing. So you know, those large moves, I couldn't catch it if I wanted to because I'm just not set up for that. Of course, I could put it in a trailing stop, but majority of the time, because of the smaller time frame, the smaller moves that I actually capture, I've got to get out. If I don't get out, then it's going to swing back the other way, and that's okay because, like I said, for right now, this is working for me. This is working for me. All right, so again, simulation account, right? So let's see, and I feel like it's capturing everything maybe that I did on the year or me prior to me resetting this. But anyway, so on the S&P futures for the day, I was up 325, right? So 325. This is futures. I haven't done Thinkorswim in so long. I know there's a way that I can pull up my orders, but I don't recall how to do it right now. Study, drawing style settings, I think. Show orders, yep. Show orders is already on. Show trades, there we go. So I still remember Thinkorswim. There we go. All right, so I got in right here. I got in three contracts, 3 shares, whatever, of S&P 500 or the E-mini here, and I got out here, right? So even when I got out, it immediately moved up, and you know. So anyway, but again, I was looking for that move down. Okay, so I was looking at a combination of, well, this price level. And this descending trend line, right? And then we also had that descending trend line. So that's what I was looking at. I was only looking for that move there. I actually went down and did some sweeping and mopping, so I missed my exit here. and by the time I came back, it had retraced. Luckily enough, it held, and then once it moved up roughly that same level, I went ahead and got out, because again, that's what I'm set up to do. All right, so let's get that out of here, and then let's look at these other spy. Wow, that looks busy. That looks really busy. Okay, so that's the volume. All right, where were we? I think we were looking at the 5-second time frame here. Let's go to smaller. And let's see. Okay, so we can look at the 10-minute time frame here. This was my markups from yesterday, or the day before yesterday. Yeah, yesterday, day before yesterday. All right, so again, we identified this this gap up here, that zone there. So that being said, the stock moved up a little bit, retraced down into there, moved up again, and there's not a lot going on. You know, even if you look at like the weekly time frame, something like that, there's not a lot going on in this area. So let's see, in this area here, we could say maybe this guy, right? But other than that, we got this guy, and then we've got this guy. Okay, where are we at through there? Well, it did just touch these, right? So the open here, the close here, open, the close, right? So it, and the top of that wick, and the open there. So this level here that it closed at today was, you know, pretty significant, pretty snuffleupagus. All right. All right, so back to the 1 minute time frame, you can see that it just closed right there at that level. How about that? Okay, and then also prior to it closing right at that level, it peaked just above it, tried to do a retracement down, but honestly, that retracement down was pretty deep below that level. So the sellers, they say, you know what? Let's take this opportunity. Got in there, sold it off to what area? Right here. I don't think that area is that significant, but who am I? You know, I guess I would assume that it would have definitely gone somewhere between here and there, right? Which technically it did. So let's see what happened with that on the 5-second time frame. So that time is 3:27. All right. Oop, wrong one. 3:27. That is right here, 3:27. Okay, so at 3:27, huge sell-off. I don't see anything standing out to me right there, other than just a mere break of that descending trend line. I mean, or you could go here. Either way. All right, so one of the strategies that I was looking at before was, 1, we want to see that break. 2, we want to see a retest. That second retest is always great, but you want to see a higher low anyway. See a higher low there, and then it's moving up. So, okay, and no. Okay, and then this volume here. This volume here is definitely a huge consideration as well. And that's what we were talking about earlier. I think I took a couple trades here at the very end of the day. And yep, so I use volume as my way to get in, get out. Let's see. All right, so here I shorted it, and I was wrong. Okay, I shorted it, I think here, because I saw this high volume right here, and this high candle, this high volume. All right, so I shorted. My idea was to go ahead and have shorted it there. Either way, it didn't leave much meat on the bone. But when I saw this high volume coming in here, along with this move up, this move toward the break, I knew that that is an indication of a continuation. Continuation happens when you got to move up, when you have a retracement, and that was a nice little wick too, right? But you have a retracement, and then typically you're going to see that higher volume come in with that move up, and then it just keeps going. So when I saw that higher volume, even though I got out of my short, I went ahead and got long, and then I took it up. Okay, but I did try to take it before the rest of the action started higher up. And then it looks like I took another trade here as well. Yeah, from here to here. Okay. It would have been better to have gotten in here and maybe capture that retracement down to here. So, yeah. Okay. All right. That is SPY on the 5-second time frame. Let's see who else. Is it Tesla? But Tesla didn't do a whole lot. I mean, it dropped down significantly. I don't even know where it dropped to. Let's go to the regular session. What was Tesla looking for? Let's go to the daily time frame. What was Tesla looking for? Tesla was looking for this level, which was nothing. That's the level Tesla was looking for? That's nothing. Weekly. Okay, so maybe. Supposed to be able to drag this. All right, so at the close and the open and the close and the doji and all those. Yeah, so Tesla went down, touched that level, and then came back up. All right, so our job as investigators is to figure out, did Tesla do something that was predictable? And I guess we'd have to say yes, right? So when we looked at, was that the level? Oh, that's the weekly. That's the bottom of 11.3. We're at 12.3. I think our line is this one here, the bottom of this day, which is 231.75. 231.75. This guy right here didn't really touch through much except for the bottom of this wick, which could be, significant, and then that that bit of a consolidation zone before continuing to move down. But this one here, I think this one is just more important because from here, this was the bottom, the lowest low before a pretty strong move up. So that level is significant. You wonder why, with it being so significant, why it didn't really on this next touchdown, how come it didn't do much? Which, I mean, the general area was respected, moved up, but typically I found that when these areas, when the price drops just below them, they can just drop just below them, but when they drop just below them, stock continues down. If it stops right at it or just above it, but mostly right at it, then it'll move up. But this came on below it, so it just all came on down. Okay, all right, so let's go back to let's do the 10 minute this time. 10 minute. Okay, so 10 minute time frame. All right, so again, we came down here and you got a lot going on here. Okay, First thing that you have going on is fairly easy to see, a descending trend line there. Okay, we did have that hesitation there. Makes sense because it's right there on the line. All right, but we also had the higher volume to account for the strength that it takes to go through this move. Just on the shorter term, we have the break of that descending trend there. And again, I mean, you have that even, I mean, the 10-minute time frame, depending on how you're looking at it or what you're trading, what you're interested in, can be fairly short. But I mean, look at this candle. This is one candle. Went straight down, but then it held, right? Held, moved up, but it didn't completely move up. Now we have 1, 2, 3 candles dropped. So we know that one candle is not a trend. We know that one candle is not a trend, right? Is 3 candles enough of a trend? All these, 1, but now you've got 1, 2, and on a higher time frame, these would be candles. I mean, let's not get it twisted. On a higher time frame, these would be candles. But so you've got these going on, all right. But on the shorter time frame, you've got these 3 candles, but they come down with nice high volume. And this isn't 9 o'clock market open volume. We expect that. This is 11 o'clock in the day volume. This is 11 o'clock when, you know, everybody's starting to kick out for the day. This is 11 o'clock volume. So we have that rush down, which we tend to see with the reversals. We have this rush down. Everybody's selling off. All the longs giving up their positions. All the smarter, bigger money. I should say bigger money. All the bigger money coming in and taking those long positions. Gladly saying, we'll take them. Thank you. You want to get rid of them? Yes, we'll take them. Thank you. Often see it happen under a level of support. Right? I mean, everybody thought that this was support. Stock flushed down and then held. That's a good indication of some support, right? And then move up. Flush, right? Flush. Okay? And then we got this next level here. Is that going to hold? Nope. Flush. Okay, and now we have this high volume, this really high volume in the cluster coming in and absorbing all that. So let's see what happened on the smaller time frame. Right there. Was that 11 o'clock area? 11 o'clock area. SPY. Why did I do that on SPY? It looks like there. I know what I did. All right, so this is something else that I'm also battling with or trying to figure out how I want to trade it. Now, I didn't jump to SPY. What were we on? SPY, that was Tesla. Let's go. But I can tell you what happened right there. Let me diverge and tell you what happened right there first. All right, so at that time on SPY, I was thinking that we had just broken a descending trend, and I was thinking, okay, buy. So I'm learning that, and this may be obvious to you guys, and if it is, great, you're making all the money in the world. I applaud you, and I need to learn from you. Okay, but I was looking at the break. Let's see. I'm pretty sure, and I might have not been trading this time frame, but I was looking at this descending trend here, and then I was looking at that break, and I saw this higher volume here. Boom. I got the break of the descending trend. Boom. So I should be at a low for a move up. The problem with that is that this stock is, and you can't go by moving averages. I mean, I can say that. Um, I'm beginning to realize more and more that when the stock is even flirting with the 200 EMA, probably just leave it alone. When it's nice and above the 200 EMA, then you can take your long trades. When it's below the 200 EMA significantly, take your short trades. When it's flirting with the EMA, then it's more likely to be going sideways. And until you can establish a pattern, a trend, then you probably want to stay out of it. Anyway, I want to stay out of it. I can't. I'm not doing a great job trading shorts over 200 EMA or longs under the 200 EMA. And that's probably for a reason. That's probably because when you're under the 200 EMA, you know, it's stock is selling off. But yeah, what did I do here? I didn't. Okay, so now I'm curious because I longed it. I got in 50 here and then another 50 down here. I'm not sure what happened here now. 50 here, because these lines aren't, the lines aren't aligning. I feel like this 150 went and closed out here, but this 50 closed out here. That would look like longs. And then I longed from here to here. Yeah. Something's not clicking right there. I don't know what I did. Nevertheless, I'm pretty sure that I was longing here. But I very well may have added to my position here when it dropped again, and we got this higher volume, and then the stock moved up, but I don't know what's happening here. Okay, maybe I longed again. That's what I'm thinking happened, but then it does make sense because it looks like I got in 50 here, I got in another 50 in here, which makes it 100, and then I got in another 50, which puts me at 150, and then up here I would be getting out at least 50, which brought me down to 100, and then I got out the other 50, which brought me down to 0. And L stands for long, so it doesn't make sense that this is showing a red line, which typically means that that I lost the trade. So let's see. Yeah, unprofitable trades are red, profitable trades are blue. Okay. All right, but I think that's probably just the nugget for today is when you're trading under the 200 EMA, you see this, all this is like really just under the 200 EMA. When you're trading under the 200 EMA, look for shorts. Look for the higher moves and sell them off. Look for the higher moves and sell them off. Look for the higher moves and sell them off. Now you're trading in the direction of the trend, which you can also use the larger time frame to give you a good idea of what's going on. Yeah, I be trading me some SPY, boy. I be trading me some SPY. Yeah, use the larger time frame to give you an idea also. But, and see, that's the thing right here. See, So on the larger time frame, we're looking at the 5-minute time frame. It doesn't start. I mean, it's still the 5-minute time frame is over the 200 EMA, so that's not even a thing. I don't think we saw any significant points of to turn around here. Let's open up the aftermarket hours. But like the question is, why did we turn around here? Okay, is that significant for a sell off? And then, like I said, the next thing is this a pullback? That'd be fine if it's a pullback. We typically going to come back to like the base or to the top here, so we might come back to this region here and then move up. But anyway, you can certainly short till you get to here, but it kept going, so yeah, maybe that's the moral to the story. Use the larger time frame to look for your pullbacks and your longer legs, and then go to the smaller time frame, and then just make sure that you're under like the 200 EMA with your. If in here you know that this is a pullback and you're going short, then go down to the smaller time frame. For me, 5-second, 15-second time frame, and then find where the chart is under the 200 EMA, and we know we've got some confirmation that it's moving down. And then look for those highs. Look for the look to enter at supply on the way down. All right. So like I said, I have typically not done that, and I have taken a beating by the market because of such. Oh, I want to do one other thing. Let's go to the get out of here, man. All right, go to the 24-hour and see. Yeah, so that's what happened, right? We were trying to figure out what happened we're trying to figure out what happened here, why this stock went right here to this level and then turned around and retraced and then went bearish for a while. And that's exactly why. And it makes sense because during pre-market hours, that was a pre-market high. So again, it's hard to trade blind. It's hard to trade blind because these other levels do come into play. But one of the things I'm learning, one of the things I feel like I'm feeling that I'm learning is that what's more important is what happened immediately to the left, right? So what happened over here, if you go to the left of the chart and you go back, 1,000 days or whatever, it's not as important as what happened here, right here, just to the left of the chart. The stock moved down. As the stock is moving down, now you want to pay attention to what's going on to the left of the chart, immediately to the left of the chart. And if you get past that zone, then you get down a little bit lower. Now you need to look, so you still need to look to the left to see what happened here, right? You don't need to look 100 days back. You could, and I'm sure that, like I said, there's always going to be points that line up, but typically those points also lined up with a point more recent. That's just what I'm seeing. At least it's been very it's been continuing to show up with these intraday moves, maybe not significant swing pivots, right? But for like intraday moves, which is all I'm looking for, look to the left. Okay, look to the left. We found this. Okay, sold off from there, and then we came all the way down to here. What? Why? Because this is at the same level as the pre-market low, and it's at the same level as, kind of that high range the day before. Coincidence? Doesn't really seem like it when you look in hindsight, does it? But if you do enough of this technical analysis and reviewing and stuff, I mean, it all starts to make sense. You put all the pieces together, and then next time you're like, oh, well, Eric, why did you take away the pre-market, right? Because, I mean, like I said, it's here, and that's why, you know, I've been taking away the pre-market so that I just look to see what happened during market hours. But then we completely missed the height. Like, without that pre-market levels, we completely missed how high it was going to go before it retraced. So that's the moral for the story today is don't skip leg day. Wait a minute. Don't skip pre-market. Do your technical analysis. Yeah. All right. Well, I'm winding down. I'm going to pull up a few charts and pull them up on my tablet and just kind of, you know, kick back on the recliner and look at some things. So, guys, I hope you're making some money. I hope you're creating some strategy. I won't even say making money. I hope you're creating strategies, refining them, and being disciplined with your strategies, because that's more important. That's the meat on the bone. Making the money, that's just the bone, right? That's just the bone. Anyway, if you can figure out that analogy, put it down in the comments. I'd love to hear about it. Put it in the comments. I'd love to hear about it. All right, guys. This is Eric. I'm out. Peace. I mean, all right. Peace. Yo, 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 yo. Yo, 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 yo. Oh man, I have a good time with this.